Thank you very much, Ore. Thank you for that beautiful introduction. Thank you. And once again, I welcome everybody to yet another session of Attitude Business Clinic. This year actually commenced with some level of optimism and positivity on the part of governments, individuals, and businesses. Unfortunately, COVID-19 has delivered the complete opposite, bringing about such devastation to the world more than anyone ever said at the beginning of 2020. There are currently over 2 million confirmed cases, with countries struggling to cope with the rising numbers, and we're still counting. Apart from its negative impact on our health, there is the potential grave consequences for our wealth. Following its declaration as a pandemic in March 2020, the novel coronavirus has grounded businesses across the world. With financial markets on the decline, major dip in oil prices, manufacturers shutting their plants, a global recession appears very imminent. Fitch, in a report last week, estimates that oil prices will average at $5 per barrel in 2020, as against $64.10 per barrel in 2019. If Nigeria's production level of 2019 is sustained, while noting the supply quota cut from OPEC, that's about 40,000 barrels per day from the 2018 benchmark, this implies about 45% depletion in expected revenue from oil, which is our main revenue source. There's so much uncertainty surrounding COVID-19, and this makes it difficult for anyone to accurately estimate the expected negative impact on the world economy. Today, we have invited experts from different backgrounds. Ore has mentioned their names and the panelists, and they're going to help us assess the situation and take a peep into their crystal ball so that they can offer us some insights on what the rest of 2020 has in store for Nigerian businesses. Once again, I welcome the panelists. But just before we go ahead, I'd like to share my own view. I believe the prolonged lockdown in various parts of the country is expected to lead to a sharp reduction in GDP figures for Q1 2020. While we'll envisage that the score will recede in Q2 2020, activities will remain slow and output will equally be low, with a very strong likelihood of a recession. This economic recession is expected to continue through Q3, while efforts will be made by the private sector to recover as much as possible from all that is lost in Q1 and Q2. While the usual increase in consumption in Q4 is likely to engender some level of recovery in the economy, provided the government will put in place appropriate stimulus packages and relevant monetary and fiscal policies in order to ameliorate the effect on businesses. I also see a definite shift from the brick and mortar to digitalization. Once again, I welcome our panelists, and we'll go straight to the discussions. Mr. Ogudre, you're welcome. Mrs. Yuade Shambora, you're welcome. And Mr. Chuma Anagbado, you're welcome. In your own view, what do you think are the macroeconomic impacts that we should expect after this pandemic? Mr. Ogudre, I think you'll take that. You can unmute. I think you're still muted. Unmute and go ahead, please. Okay, Mrs. Yuande Shambore.
Okay, somebody, can you hear me now? I think I was muted by the admin. So
okay, good. We can. Okay, sorry about that. Yeah, we can hear you clearly now.
Okay. Thank you very much for inviting me to this very interesting session. We are currently in interesting times. I don't think that it's expected to witness what we're witnessing today across the world. And this is the first time that we've seen nearly all markets face an existential threat to to our entire macroeconomy. So whether you're in Asia, Africa, United States, South America, we all sort of face the same issue. So I'm going to take on the impact of COVID-19 on markets. I believe that's the question one of the questions that I see here. In terms of investing, one of the questions that I get a lot from people is, I mean, what do we invest in at the moment? What do we do with the money that we have? And it's simple. When you when you're in a crash, or an existential threat, such as what we are experiencing, typical advice will be to hold on to cash as much as you can at the moment. And that's because asset prices are going to will continue to fall, like we've seen. This is not a period where market fundamentals make any sense. Right now, a lot of people are panicking, and people are fleeing to cash. So based on that, assets are currently well below their intrinsic value. And so if you hold on to any asset today, whatever asset you're holding on to, it's probably very well undervalued at the moment. So you ask yourself, do you want to hold on to an asset today that is not reflective of the value, or do you want to wait and maybe buy that asset at a price that is lower than its intrinsic value? Common sense would suggest that you buy an asset that is lower than its intrinsic value. So if you bring that to Nigeria, a lot of assets today are on fire sale. The stock market is, at historical lows. We've seen shares at prices or at price earning multiples that we haven't seen before. I have never seen the stock market this cheap, even though we saw a bit of a rally last week, but a lot of stock prices are very cheap.
Okay.
Treasury bills rates are sorry.
No, carry on. Okay.
Okay, so fixed income yields as well are very low. So you're seeing treasury bills rates at 5%. You're seeing bank deposit rates at even lower than that, than 5%. So fixed income is also relatively low, while there's just limited investment outlets out there. Now, but nevertheless, there's still opportunities for anyone who wants to invest. What I would typically say is that at the moment, hold a lot of your cash. If you missed out on an opportunity to maybe convert some of your money into forex, then you might as well just hold on to your cash at the moment while you look for investable opportunities. A few opportunities are there, but I guess in the course of this session, I will list out some that you can buy this week and over the next coming weeks. But for now, I'd suggest you hold on to your cash.
Okay, thank you very much, Mr. Agudre. Very explicit. You mentioned about the fact that there's so much uncertainty. You mentioned about the fact that there's probably some need to take a flight to cash, hold on to your cash. But what do we see beyond this COVID? I mean, what do you think will be the effect on the stock market in Nigeria, particularly after the COVID is confirmed to have flattened, especially when we consider the fact that the market has remained volatile and yet to fully recover after the 2008 recession? What's your take? Hello, Mr. Agudre. I think you have muted yourself again. Can you unmute and come up?
Hello, Mr. Ugudre, can you hear us?
I think it's still muted. Can you unmute him from your hand so that he can answer the question?
All right, thank you. I mean, I think that there's a setting somewhere there that the host is, when you mute, the host would always have to unmute you. So I think in case questions come for other people,
please
you need to disable that for some of us. Yeah, so always do that. Okay, all right. So very good question. There are a lot of challenges that I see. For example, now that the COVID-19 is still very much around, what you've sort of seen is a lot of investors have, when I say investors now, foreign investors, they have pulled a lot of cash out of the stock market. In fact, not just the stock market, the capital market. about 95% of the total, foreign investment inflow that comes into Nigeria today comes in the form of foreign portfolio investments, which people like to call hot money. So that is basically money that finds its way into the stock market or the fixed income market. It's not money that goes into maybe the real sector, which is, a lot of the money that some of us would prefer, right? Foreign direct investment. But a lot of the money that comes in as foreign portfolio investments. So we've seen huge capital flight from our own stock markets and fixed income market, which we generally call the capital market. And it's not just restricted to Nigeria. It has happened in emerging economies the world over. So you've seen a lot of capital flight because people have not seen anything like this before in decades. So investors have basically called for all their funds across markets. So a lot of people are flying to the safety of the dollar. Even assets like gold had a bit of a pressure a couple of weeks ago before it started rallying again. So that is what has happened. And when you see a pullback like this, it means that asset prices will depreciate. And it's likely going to remain this way for a while. Now, there's also another challenge that we've seen. And that challenge is a lot of investors are also worried about Nigeria's debt situation, debt and revenue situation. So we are very high on a lot of debt, while we are also now concerned with our ability to actually generate revenues. So because of the fall in oil prices, the lower demand for oil, you expect that Nigerians' income generation ability would reduce by as much as 50%. So foreign investors are looking at that as well and saying, look, this country would have a major crisis in its hand. And if it's going to have a major revenue crisis in its hand, then there is risk that it might not even be able to honor its own debt, right? And then there is also risk that a lot of companies in that country would suffer in terms of revenue growth or profitability, or even remaining solvent. So this is actually how a lot of these foreign investors think. And because of this risk, you see that a lot of them would not even return back into the economy till something happens. And what we expect would happen is that the IMF will step in. And I think that some of us have seen this in the news lately. For the very first time in Nigeria's history, we could likely see ourselves borrowing money from the IMF.
Okay, thank you. Thank you very much for that explanation. So it's a lot of gloom, but I believe that like most previous pandemics and major crises that we have seen, we just have to remain optimistic. I understand there's always a V-curved shape. There's a major contraction, and of course, like a spring, at some point, there's supposed to be some bounce back, and we just need to get prepared for that bounce back.